Welcome back to CNBC-TV18. For now, it's very, very quiet. The mid-cap index, though, is holding up with gains of 150 points. But let's connect with Shriram Finance for their business momentum, a check on their business momentum. The company, remember, was created out of the merger of Shriram Transport Finance, Shriram City Union Finance and the ex-holding firm Shriram Capital. YS Chakravarti, who's the MD and CEO at Shriram Finance, joins us now to talk more about that. Mr. Chakravarti, thanks a lot for joining in. First, if you can just, start by talking a little bit about the transport finance vertical and how that's shaping up. We have started to see some resumption of the upcycle in the commercial vehicle market. And over there as well, the indication is that this is the start of a multi-year upcycle. Can you tell us what are the trends that you are seeing and what kind of growth can you eke out?
What you said is right, that there is an upcycle in the CV market. There is a lot of, we are seeing a lot of demand coming in for the used vehicles now in the market. So replacements are happening. So the used vehicle stock is coming into the market, which is our primary product that we fund. We are seeing this across segments. In fact, we are seeing this pickup in demand from a small commercial vehicle to a medium and heavy commercial vehicles. In fact, we are also seeing demand coming up in construction equipment, machinery. So, we are keeping our fingers crossed, hoping that the cycle will, continue.
A lot of people will be keeping their fingers crossed and hoping that the cycle continues. Mr. Chakravarti, now with the merger being done, just wanted to understand the upselling / cross-selling opportunities here. I mean, how many customers do you think will be an overlap between the erstwhile STFC and City Union, Shriram City Union?
See, on the date of merger, we had very little overlap between the two companies in terms of customers. So that's the data that we are mining now and working on it. The past few months, we've been working on identifying where we can actually sell the other companies' products to the customers. So right from 1st of December, that activity is going on in full steam. So we've identified that almost about between 20 to 25% of STFC customers are into some kind of a business where they are using these commercial vehicles for their captive use, and those are the customers that we are targeting for our business loans, and vice versa. The business loan customers in SCAF, that is Shriram City, are running commercial vehicles. So that is another. Those are the people that we are targeting for selling commercial vehicles.
Just to come back to that point, Mr. Chakravarti, which you first made good demand for commercial vehicles, etc. We spoke with Shriram Finance just a couple of days back, the management just a couple of days back, and they said that there are two things. One is that diesel prices remain quite high, right? I mean, international oil prices are off, but diesel prices remain where they are. There's not been very much correction. And second is the cost of a commercial vehicle now is 40-50 lakhs, at nothing less than that. So the cost itself raises for many, at least individual customers, viability issues. I mean, even if you go in for one vehicle or two, the cost is 1 crore plus, and because of these two reasons, the commentary was a bit more muted. Would you agree with these points, and what are you seeing?
See, on a new vehicles, I completely agree with the viewpoint. Today, the costs of for an individual truck owner to go and buy a new truck is becoming very expensive proposition, and becoming difficult for them to break even. So they are actually, what's happening today is our existing customers also are moving towards they're replacing it with a probably slightly newer vehicle, which is used, in the sense a guy who's now running a 7-8-year-old vehicle is moving into a 3-4-year-old vehicle. They are not going for a new vehicle replacement, buying a new vehicle. So the demand for the used vehicles is quite robust. The cost of the new heavy vehicles at 40-50 lakhs today it's probably is being only met or being bought by the fleet operators.
Right. And in
who have the ability to pass on the cost of fuel, the increased cost of the vehicle and the fuel, who have rate contracts.
So can you tell us what is overall, I mean, you spoke about how you're seeing an improvement in terms of both demand, there's construction demand coming back, the CV cycle is looking good, replacement demand is back. What would you be targeting as AUM growth, not just for FY23, but what are you looking at in FY24 as well?
See, the overall we are looking at, for the company, SFL as a company, we are looking at about a minimum growth of about 15% on the AUM.
15% AUM growth for FY23?
Yes.
Okay.
Sorry, 23-24, yeah.
For 24, okay. That's 15% AUM growth. All right. And what about the credit costs?
See, credit costs will be in the range of about around 2.4, 2.5%.
All right. Take that point. Thanks a lot for joining in, Mr. Chakravarti, and giving us all the details. We wish you good luck with the merger and the